Well, as we had mentioned right before the break, topic number one in the Forex markets this week has been the fate of the U.S. dollar as a global reserve currency. Russia and Brazil have signaled they're diversifying their foreign reserves. And on the other hand, though, we heard Japan's finance minister say he's confident in the strong U.S. dollar policy. So to sort it all out, we're joined now by Nick Bennenbroek. He's head of currency strategy at Wells Fargo Bank, joining me here in the studio. Nick, great to see you. And certainly been a lot of action so far this week in the Forex markets. I mean, you say essentially that it's pretty much very unlikely that we're going to see the dollar lose its reserve currency status, right?
Very much so. I mean, I think that you definitely need backed by a very large and wealthy economy, a very liquid currency, for example. So there are very few alternatives at this point. We think the dollar's going to remain a reserve currency for decades to come.
For decades, or at least a decade? At least that's what
I'd say at least a couple of decades.
Okay, and what happens after that, though? I mean, there's only so long that this can occur for, though, right?
Well, again, it's difficult enough to forecast out 1 to 2 years ahead. So forecasting 1 to 2 decades is difficult. I don't think it's inevitable, for example, that the dollar will lose its status as a reserve currency. It's possible. It depends what happens in China in terms of the growth of that economy, in terms of the opening of those markets. But it's going to be something that happens over a very long period of time. And it depends on the policy choices that we make over a very long period of time here in the US as to what happens out that far. But, for the next 5, 10, 15 years, I don't think there's any real worry about a dollar collapse.
And yet, you and I are sitting here today talking about something that you're saying could happen 10 to 15 years from now. So obviously, there's a reason why we're talking about it today. A lot of comments coming out from various economists, but also, as I just talked about, Russia, Brazil, talking about diversifying their currencies. What message, then, what do you think is going on here, then, behind the scenes?
Well, I mean, I think there's an issue perhaps of diversification, but this is a gradual or even a glacial process. When you look at the early part of the 2000s, the early part of this decade, for example, dollars were 72% of reserves. They're 64% now. So there's been a slight drop. Most of that happened at the start of this decade. In the last couple of years or the last few years, it's been a very, very gradual decline. So I'd say, yes, there's been a gradual shift away from the dollar, but I wouldn't overstate how quickly that is happening or how important it is for foreign exchange markets right now.
Right, and you've seen other currencies rise in strength and perhaps importance. You've seen the euro, as well as perhaps the Chinese renminbi. I mean, tell us the likelihood of those currencies being a possible replacement, even if it is decades on out.
Well, the euro, I think probably of the two, I think the Chinese renminbi is more likely to eventually replace the US dollar. The euro right now has got the issue of the bond markets or the assets that would be used as reserve assets, for example, being slightly more fragmented. The issue with China is that they definitely need to get to a situation where, I mean, they essentially rule themselves out now because their currency is not freely convertible. So they need to develop the capital markets, they need to make the currency fully convertible, and they need to just essentially keep working the size of the economy and basically they're already a large trading partner within the global economy, but they do need to get closer to the US status.
Right, because that's not enough. I mean, you basically need to have a currency that's very liquid in order for it to become a reserve currency, right? I mean, and you know what, Nick? Let me have you answer that after the break, because we'll talk a bit more about this debate on the currency reserves and also what the outlook is for the dollar as you see it in the next few weeks. So we're talking with Nick Bennenbroek of Wells Fargo Bank, and we'll be back with more on the greenback and a whole lot more on Bloomberg News. Keep it here. Okay, well, we're focusing on the dollar this morning with Nick Bennenbroek, head of currency strategy at Wells Fargo Bank. And Nick, right before, a few minutes ago, we were talking about the renminbi, and you were saying that perhaps that might be the likeliest candidate for a reserve currency. But really, I mean, liquidity is one of the key factors, right, in order for any currency to become a reserve currency.
Sure, and renminbi is not freely convertible at this point, and there's two aspects to being an international currency. There's the status as a reserve currency, but also using a currency for international trade, for example. And so you want to be able to basically take that currency that you're trading in and convert it into a currency that you really want. And so that's why it's difficult to see the renminbi being used as a tradable currency for any long period of time ahead.
Right.
Despite the comments that we're seeing, you really need to see a critical mass in terms of a number of countries that are comfortable using a particular currency to make it the international currency, shall we say.
And Paul Volcker, of course, saying that for all practical purposes, there just is not one at this point, which leaves the U.S. dollar, again, as the reserve currency. We had some comments coming out. We were talking about that with the Japanese finance minister, saying that he's confident in U.S. debt and also in the strong dollar policy. I mean, what do you think is behind those comments, though?
Well, there could be two things. One, there could just be trying to provide some verbal support for the dollar, trying to make sure the yen doesn't get too strong, because that economy is in a little bit of trouble, quite a lot of trouble right now. But also, I think Japan and China, there's an issue here of them wanting to protect the value of the assets that they already have in terms of a lot of US treasuries. It reinforces the point that if there's going to be a move away from the dollar, it's going to be very gradual, very cautious, and the countries that are holding a lot of US dollar assets, China and Japan, are going to be very careful about how their process occurs.
And it puts them head-to-head against each other. In terms, they're the two largest holders of US debt right now, and they're on opposite sides at this point, it seems.
I wouldn't necessarily say that. I mean, I think certainly the Chinese are opening up some kind of debate. I think one of the issues there is they're just trying to essentially flex some muscle, or perhaps make it clear that they're a major player on the international stage. But again, I think even the Chinese are going to be pretty careful about, again, not doing anything to jeopardize the value of the holdings that they already have.
Right, they wouldn't want to see their own assets decline in value either.
Right.
And very quickly, Nick, because you have been bullish on the greenback, I believe you have a 1.2 target or something on the euro-dollar rate. Has any of this debate this week at least changed your view at all on the strength of the dollar, or no?
Well, not from a medium-term perspective. We still think the US economy is going to come out first, and will do better against the major economies like the Eurozone and the Japanese yen. So how it's changed our view is probably the dollar's weakened. It's provided a more attractive buying level, so it just reinforces.
Okay, so you'd buy in weakness at this point?
Yes.
Okay, Nick, great to talk with you. Thanks so much for joining us on the dollar. Nick Bennenbrook, Head of Currency Strategy at Wells Fargo Bank.